Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, good day everyone. It's Liam Garman here, Managing Editor at Real Estate at Momentum Media and co-host of the Smart Property Investment Show. And I thought it'd be quite interesting today to discuss something close to me, something that is close to home for me so our listeners can get to know a little bit more about myself and my journey with property. And I'm joined by my buyer's agent, who doesn't get any fees. The most that she gets is a Christmas card and a thank you. My sister, Jo Vadillo, how are you? And welcome to the podcast.
Thanks for having me on the show, Liam.
And look, okay, so over the last couple of weeks, I was scrolling through Facebook. I was scrolling down Facebook and there was, I'm not going to say what media outlet it is, a particular media outlet posted a photo of you on a construction site, and it was the old adage of you can do it. I've done it. You can do it too. And I think by the time I scrolled on Facebook and I saw your photo there, you had about 3,000 comments.
Yeah.
How's the internet fame going?
I reckon about 95% weren't particularly favourable.
They weren't, no.
No. And you've got to develop some thick skin in the game. But yeah, it was a little bit disconcerting, but you know, it is what it is. And I stand by and double down on what I was actually talking about. And that is about a little bit more kindness towards landlords who are actually doing it tough too, keeping these properties. So now that I've said it again, I'm probably going to get more hate mail.
I think this is going to be a safe audience. This will be a safe audience for you. But I mean, actually reading through the article, it seemed like quite a reasonable article. It was just talking through your investment history and giving reasonable advice and reasonable insights into how you were able to build your own property portfolio. And some of the challenges that landlords are facing the way. We all know we're in a cost of living crisis. The cost of building, the cost of, say, new appliances, the cost of upkeep is going up. So, yes, while rents are going up, there's all those overheads behind the scenes that are as well. The article itself was fine. It was just the kind of clickbaity Facebook headline which invited the anger.
Yeah. Look, absolutely. And the thing is, I'll read someone's comments myself and go, I concur with them. But then when I read all the mean comments behind that, I don't go into bat for them. I think all the people, all the people who sort of supported me were probably busier doing more constructive things as opposed to like going, I'll be nice to her. She sounds like a good human. But ultimately, it was a little bit damning, but, you know, it is what it is. And as I said, I feel that, like you say, you know, all the cost of living, that's we've all been pummeled with, 13 interest rate rises, the trades, everything's gone through the roof. And I'm really grateful for the fact that there are investors because I'm renting myself at the moment circumstantially and people need somewhere to live. So without investors, there'd be a much bigger problem on our hands than what we have presently with, the vacancy tightness in the area.
Oh, of course, you only have investment properties if there's someone that's willing to invest in having renters in that property.
100%, yeah.
And of course, because you're building at the moment, which means that you are renting, and that's something that Australians are always going to have.
Yes, of course, yeah. And people change jobs or they move to another city and they're not ready to settle down. They don't know what the good schools are or the good areas, or marriages break down. All of a sudden they do need to be near in orbit to their children but not necessarily under the same roof line. And so that's not even touching on the fact that we've got so many people coming in from overseas that need a home. And that squeeze on vacancy is across Australia. And we're just it's a demand-supply issue that, there is no solution. So thank God for investors.
Yeah, and I mean there was data released this week on negative gearing. I know this is getting a little bit off topic, but released this week that if you do get rid of negative gearing, that your supply is going to decrease by about 4 or 5%.
Be catastrophic. Especially in areas like you're talking about, like say with 5 kilometre, 10 kilometre radius of the capital cities. Your yield's not great if you're an investor in those areas, unless you bought, in the 1970s. Obviously there's outliers and people inherit homes and things like that, but they're not great investment decisions. So without negative gearing, a lot of people would be also releasing these properties, and therefore there's going to be a much bigger problem on our hands.
You'll have that fire sale of everyone entering the market at the same time.
Yeah.
And it is worrying because if you do have, and we have the investment side of things, which is it's bad for investors, but also just from that human capital point of view, the ethics point of view, that if you now have, if you do decrease building by 4 or 5%, we're already a couple of 100,000 homes behind our projection for the decade. So we're already a couple of 100,000 homes behind the government's National Housing Accord.
Yep.
And if we go further back with that, that means houses will be more expensive. Rents will be more expensive because there's just less supply. So it's bad for investors and it's bad for everyday people at the same time.
Yeah. And I think what that article, where it got people a little bit cranky, was the fact that there are people out there price gouging. You know, there are people out there that are unethical. They lack integrity. They're putting the squeeze on people. They're pushing out good tenants to get more money out of new people and all the rest. So, you know, it's just one of those scenarios where, as you say, like, you know, we are behind already in terms of what that housing, roofs over the headlight, over our heads, and without investor activity, it's just going to make it harder and harder, and people are going to be moving further out of the city. And we don't even have the infrastructure there to get people into the CBD to do work. I mean, people are already commuting 2 hours a day, you know, in some cities. So,
especially, and you know, like you speak to people that live, say, in the Hills District in Sydney. Before we had the metro, it could take you an hour and a half. Well, before less traffic on the road, it would take you easily an hour and a half to get in.
But when you add up, what is that out of your work week? You know, out of your life, is that 15 hours on the road? I mean, stress levels away from home. And that's, so, I mean, a lot changed around that COVID, work from home, flexibility, etc. But we're kind of getting back to the horrors of Sydney traffic again. And I'm sure that's the same for other capital cities as well.
Oh, absolutely. Now, you're a very multifaceted person.
Oh.
Well, you've got a lot of things on the burner. One is your property investment.
Yes.
The other is your business. You're a buyer's agent. And then the other is Property Women, which is helping women make the right decisions. And we're going to go through those one by one because I think our listeners would love to unpack each one of those. Because your life is property, for the property investors that are listening to this, or maybe even young Australians that are renting at the moment, look, I can't afford to buy in Sydney, let's rent vest. What strategies are out there? What are some critical success for property investors that you're seeing at the moment?
I think taking the opportunities that are there today, if you're pre-approved and you've got the capacity to go and buy, and I do hear people say, I'm going to wait till next year, I'm going to wait till prices fall, I'm going to wait till I find someone else to, you know, marry and buy a property. But if that's a 2-year plan, the properties are going to get away from you in terms of pricing. So if you're pre-approved and ready to go, maybe you can't buy where you want to live. And there's no harm in doing that rent vesting formula. Get on the property ladder now. And whilst you're doing that, yes, you are going to be in the rental pool. I understand that. But most people I know, when they started out investing in property, they didn't buy the one. You know, it wasn't always, you know, here's my home overlooking the beach. I mean, most people start in something a little bit more modest, probably further away from where they want to be. It's one bedroom, 2 bedroom in a strata complex. You know, that is just how you start to get on the ladder and start to grow. And you can use that property, you can renovate it, you can add value, you can sell it, you can pull equity out of it. It doesn't have to be in the city you live in. It could even be a really busy regional hub that's got, you know, again, like there's so many of them you can actually look at that multiple employment opportunities, you know, lots of young families moving out there, good public hospitals, education, etc. So just be a little bit more broader in your range in terms of thinking of where you may want to invest. And don't sit on those pre-approvals and don't necessarily wait, you know, because sometimes, and I hear people that they've got the savings, they're ready to go now, and they wait. In 6 months' time, unfortunately, the market's moved beyond what their capacity is to jump back in, and they're going to be forced to buy into areas that are possibly more bridesmaid than bride.
That's a good way of putting it. But yeah, in terms of the waiting, I think what have we seen over the last 12 months? 30% up in Brisbane.
Crazy.
Then we got the clearance rates in Adelaide and Perth, which are just out of this world.
Out of this world, yeah.
There is no necessary benefit in, oh, well, if I can cobble together more of a deposit, well, you're not going to save enough to offset that. But at the same time, one bit of advice that you gave me, which I also thought was very important, it's not waiting. It's not necessarily kicking the can down the road 6 months to a year, but the next best deal is only a week away.
Yeah. And it's lousy when you miss out on a deal. You know, but if you as an investor, if you're looking in an area, start to get to really know the agents, let them know what you're looking for, you know, build rapport with them. And this is how, as a buyer's agent, we find off-market deals. You know, because I don't get every deal I put. You know, money only goes so far. So if my clients are capped and then someone else comes in with another $100,000, I'm out of the picture. I can't fight that fight necessarily. But agents will say to me, look, you know, you've been great to deal with. I know your clients mean business. They're pre-approved. You know, I've got this other potential, someone coming up the market. And if you've got that relationship with agents and they like you, you know, you're going to get those off-market deals. So just keep getting up and keep going back. You know, the deal of a lifetime might come around once every week, every month. You know, they do exist. You've just got to be ready, and let those agents know. So if you are looking in a certain area, pick up the phone, go to opens. Sometimes if those opens are sort of even above where you're priced at, just introduce yourself to the agents and say, look, I'm assessing the area. This is what I'm looking for. Do you have like a VIP database you could add me to? Is there a something here? I'm pre-approved. I've got my, solicitor on the go, and, I really mean business. I want to buy something before, November or Christmas or whatever your wording might need to be, to try and let them know that, hey, here's a buyer who's ready. I'm going to have an easy way of, communicating with them and close a deal.
Oh, and that's what we lived last year.
Yes,
where we were able to jump in the queue because your I's were dotted, your T's were crossed. So an agent who had a very motivated seller, you can jump ahead of the queue because you've done the basics. Now, going into your career as a buyer's agent, negotiating is obviously a very key part of the job. Do you have any tips for our listeners on the optimal negotiation process?
Yeah. I actually nerd out at the negotiations.
Well, that's good. Well, you want a buyer's agent that's going to nerd out, right?
Yeah, it's like, right, this is it. Like, I'm going in. But I always strategize before. I don't just go, thanks, I'm going to put the offer in. I sit down, I think about everything we've discussed with the agent. Circumstances of the vendor is a big deal. So some agents are like, oh, what's that got to do with it? A lot has to do with it. It's like, have they been there for 40 years and it's really intimidating, the whole sale process. So maybe they want a longer settlement.
The sentimentality of it. They want to make sure that someone's not going to come in and renovate or knock it down.
And that has actually worked in my favour, where I haven't even been the top offer, but I've played into that, exactly what you're saying, that emotional, this is where they had Christmas with their children. This is a big deal. Sometimes it's situations where they might have already bought something and they really need to get out of it quickly. So can we make that a shorter settlement period for them? So I find out what it is that then they need. And again, I make that offer on email, really always in writing, really easy to digest for the actual agent. And then a lot of the time the agent will share my email with the vendor. It's like, we've had this offer, here it is. And it will say, my clients mean business. They're approved. We've had the contract reviewed. We've downloaded a strata report if that's the case. We'd like to offer extended settlement if that is, if that appeals to your sellers, or 42 days is fine. Whatever it says, So I just go in and make it as easy and digestible as I can. I very rarely go in with my best and final. And I don't use tactics like, here's my offer and it explodes at 5 p.m. if you don't accept.
Yeah.
You
don't want to come in as a terrorist.
Yeah, exactly.
No one likes a terrorist.
No,
Yeah.
and like some people are like, oh no, should we do that? I'm like, well, not yet, not at this stage, Circumstances will sometimes dictate that. Like, just say we're going to auction. There's two properties you like going to auction on Saturday, but the one that's the latter option is the one that you really, really want to get. So we might then say, we really want to get this property prior to auction, and here it is. Here we are, but we're going to need to know by Friday 5 p.m. That sort of story can play out sometimes. But make it easy, and make it easy for the agent to then share it with their vendor. And sometimes, as I said, I have not always been the top offer. I've just had the best terms. If they've already bought something, do they want to align the settlement, simultaneously with the purchase of their new property? And sometimes that, just knowing they don't need bridging finance, they don't have to move out, they don't have to live with in-laws, for 6 weeks or anything like that. I'm making it really easy to take my offer. I may not be the highest one, but geez, I'm making your life easy for you.
So it really comes down to that social aspect, just knowing what the seller is and just tailoring around.
Yeah, and also obviously market research, knowing your market, knowing what's selling. It's there's a whole the whole parcel there. Really understanding what the needs are. Dollars are always going to talk.
Of course, yeah.
I don't want to come in so low that I lose credibility with the agent. I want to have a respectable number to start with a bit of room that I can come up. It's kind of what they say, don't hate the player, hate the game. But that's what we play. And more often than once I have got, cracker deals, because I've also worked with an agent that may not be savvy to the area, or I know, agents have actually said, look, I'm going to Bali on Saturday. So I'm like, oh, are you now?
Yeah. Right. And so what, presumably someone's coming in.
Well, they want to get they want a deal done. They want,
they just want to kick it off.
Yeah.
They don't want it hanging over their heads.
They don't want to
Yes,
but a good agent will, and rightly so, contact anyone with a contract.
Yep.
But you want to work with pace when you're putting an auction in. If you see something you love on Saturday, don't wait until Wednesday afternoon to let the agent know. Communicate with them. Say, look, we really like it. We're crunching numbers. I want to let you know that we're going to put an offer in. The longer you leave it, the more eyes are on the property. The opens they have, you've got more buyer competition. You've really got to jump and be quite swift with it. And I often use language like, by close of business today, I can pay you a deposit. The contract's now with the solicitor. We can have this stitched up today.
Yep.
Everyone loves that language. Yep, good. Okay, done.
You're working around them.
Yeah. And also, if you've got your home's open and you've got kids, you've got to keep that clean.
Yeah.
It's a headache and it's expensive, and, having it staged and the marketing. So that's why when I get off markets, I'll actually say, oh, here's an offer. Your seller doesn't have to stage it. They don't have to even do the garden if they don't want to. No marketing. Yes, they've got to pay the agent's commission, but it's like bang, bang, bang. Here's a price. Let me have it and make sure I've got no competition on my tail.
Yeah. Now, I want to get a little bit of insight, because obviously there's a lot of benefit here to having that local niche, that if you're looking to invest in an area, getting to know the agents, knowing their peculiarities as people. Even understanding, is this an agent new to the area? Have they moved offices? Have they moved outposts? And then you could potentially work around that. So there is a huge benefit for that local niche. How do you balance that and then potentially investing regionally? Because they're very two separate strategies. How do you balance that?
Meaning the language you might use when you're dealing with the agents?
There seems like a huge benefit in developing a very deep knowledge base in investing in a certain area.
Yeah.
But granted, that might not always be the case. So you might have to look for another city. You might have to look for another state. You might have to look for an area that you've never even stepped foot in.
Yes.
What's the trade-off?
Well, you engage a buyer's agent that is an expert in that area. I think that'll be key. Really, and in the event that is not a possibility, other opportunities are that you get on the phone and you talk to these people. The pace of doing things regionally is different to capital cities.
Yep.
It's here, it's all go, 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 go. It's all like, pressure, pressure. But, you go into regional areas, you don't want to sort of be, it's more of a slower pace. It's, it is just a slightly different the way you word things as well.
Not, $1 million listings, New York kind of
no one wants
push,
the sharp suit from the city that comes in and goes, I want this signed up by 5 p.m.
Yeah.
So you do need to play your cards a little bit carefully. Talk to the agents like they're human. Just start to build rapport. Like, I'm looking to the area. I'm not particularly familiar with it. I really like the look of this property. And you can do so much research that's free, desktop research. I mean, even just looking at the major portals, they've always got a lot of free tools. You do a lot of desktop research in your pajamas. You know what you're talking about. And then you ring the agents. And some of them are just so giving of their local area knowledge. Once they know that they're going to be working with you or potentially working with you, they're really quite free and easy to work with. And but in the event that you are time poor, outsourcing it's a cost that's, it's not a false economic decision by any measure. It means someone else is on the ground for you. They're looking at the property. You really want to have someone that's looking at the ugly parts of the building, not just the pretty, sexy stuff. It's the cracks. It's the smell of mold that you can't pick up in a photo.
Of course.
Yeah. So I think it's money well spent, and obviously speak to an accountant, because what some of those aspects are obviously a claimable expense as well. So it's a very smart decision to outsource when you're not able to be on the ground. And that applies even if you are local. If you've got a really full-on job and the only time you can get out is on Saturday, you're out with everybody else looking at that property. If you're working with the buyer's agents, they're there at 11 a.m. on a Tuesday to get the sneaky peek as the professional photos are being taken. Yeah. And I've bought properties, the photos have been taken, but they've never hit the major portals because I've bought it.
Because you jumped in first.
Because I got in first, yeah.
It seems like, the difference between a good investment in property and a bad investment in property is pretty big. It's
enormous.
Pretty big.
Yeah.
So it seems investing in a buyer's agent's a pretty trivial cost over the long term of an investment.
And some people can't necessarily see how that works, but you're making such a valid point, because if you make a really bad investment decision, that can set you back 5-10 years behind your trajectory. And in the span of your life, that time really is, major setback financially. And you just got to make sure the property itself is, it's got to tick all the right boxes. You don't want a heavy-handed, high-maintenance property unless you're planning to do a major renovation on it, or there's ample land that you might want to subdivide. There's a reason for you to buy something like that. What we like to look for is good set-and-forget properties for our investors, where we can, brick and tile. It's in a great area, well serviced by infrastructure locally, and also high demand for renters. And, I'm always looking at what is the rent now? What could the rent be? What do we need to do to increase that level? Because ultimately, the less money you're pouring into that investment property, the more then you can either throw onto your own mortgage or you get to the point where you can then go and invest in another property as well. And that is where you start to see your wealth creation really start to grow.
It seems like such an easy mistake to make if you don't invest the time in it, that You don't have enough of an insight into strata. You don't have enough insight into what were the minutes of the last meeting. Oh my gosh, there's actually $100,000 capital works. That's next month. We got nothing in the sinking fund. That is a bad investment. And we see it all the time, people try and immediately exit, and then you're tens and tens and tens of thousands of dollars out of pocket before stamp duty and before all the extra costs that are in there. So it is a very trivial cost to pay for a buyer's agent.
Yeah, absolutely. You've got to work with someone. It's their zone of genius. You don't want, if you're having surgery, you don't want someone who hasn't got the experience behind you. And the same when you're buying property. I mean, this is one of the biggest expenses you're ever going to incur in your lifetime. It's a huge deal. So the cost of working with someone that's going to use your money to its best usage. And also when you're talking to buyer's agents, interview them. Well, how many investment properties do they have? How long have they been working for? How well do they know the area? Like really,
when you're vetting your own buyer's agent.
Oh, totally. Yes, yeah. Like you want to make sure
that
they've
got to put their money where their mouth is. The last thing you want is a buyer's agent that says, "Oh, I'd never invest in property."
Yeah, well, I remember years ago, like going back, some time ago, I was working, speaking to a mortgage broker, and he'd sat down for a couple of hours with us, and then he said something. I said, "Oh, how many mortgages do you have?" He said, "None."
Oh.
So it literally, to me, that just eroded all my confidence in him, and that was really early days of myself being an investor. But he just lost all credibility in my eyes at that point. And, one of the things I guess, having time in the game as running my companies for 13 years, I've been an investor now for 22 and a bit years, I think it's moving on to now. We've done a lot personally, and I'm still an investor. Like I'm still, doing things. I've done subdivisions. I've bought into state. I've done capital raises. Like renovations galore. We've done a lot of things. So I get to explain and help my clients understand.
Of course.
What that looks like. I understand the challenges, the solutions, the joys, the disappointment. So a lot of my job is that, just that customer service mentoring process throughout the journey as well.
I mean, obviously you can't give financial advice, whether you're a buyer's agent or a broker, but sometimes I wouldn't do that if I were you. She's really important. You did mention before, you got to do your desktop research.
Yeah.
I mean, look, this is a very weird question. It might be a little bit basic, but for people that are new into property investing, what's an optimal desktop research tool? What does it look like? Yeah.
Well, look, I think real estate and domain both have platforms within that. You can actually look at what the neighbourhood has performed. How does a 2-bedroom, 3-bedroom, 4-bedroom, 5-bedroom perform? So if you're looking to renovate, you can see in the area 3 bedrooms get this price. So therefore, if I've got a property big enough, if I was able to put another wall into that property, I can see I can make another $150,000. So that's all buried within those platforms, and they're all free for us to access. And another tip is if you are looking to buy a property, you've got to be across both of them because not all sellers are across both of them. And it astounds me. I feel like if you're selling a property, you should be throwing everything at it, but that's what happens. And SQM is also the research there. I like to look at that one for vacancy as well, to assess that. We obviously pay to use RP data, CoreLogic's RP data, which to me is the go-to. I can zoom in on an area, I can measure the backyard, I can suss out what else is sold in the building or who else has recently sold in in that street. Yeah. So when I'm working with someone who does want to renovate or potentially knock it down, I could say, hey, we can get in here for like 1.4, but I can see that a brand new build just sold for 2.8 down the road. So therefore, if your build price is this and you're not overcapitalizing. So it allows me to do a lot of that search on behalf of our clients as well. And research isn't for everybody.
Of course. A lot of people get too stressed. It'll be just too much of a, Or
either they get into an analytical spiral and they actually do nothing. You know what I mean? It is like, over-analysis, paralysis and all the rest. So if you know that's not your skill set or negotiations aren't your skill set, a lot of buyer's agent offer those, the bespoke service where they might just come to the table and do that negotiation for you or just do the due diligence for you and you go and physically do the inspection. So there's different levels of service that you can actually tap into that resource.
The analysis paralysis. I did an Excel spreadsheet where I got what were the independent variables were number of bedrooms, land size, and something else. There would have been probably car parks and bathrooms. And then I got as much data from a couple of suburbs that we were looking at last year. And then I started running regressions off of it to see which independent variables are worth the most. So then, no. So the dependent variable was rent. So then getting the independent variables, like what's the most important, then working backwards to see what house was going to be with regression the most valuable. But then you get into your own head.
Oh, completely.
It's like, and then it ruins everything. I don't know anything anymore. What's up, what's down?
You know what I'm playing with a little bit at the moment? It's ChatGPT.
Yeah,
like
100%.
I've actually like dropped a couple of the numbers in and just said, like, and it's the tools aren't quite perfect, and real estate's got a bit of a .com.au's got a bit of a firewall there, but I'm actually like playing around with that sort of stuff as well. But,
How so?
But like put the addresses in, all the details, and say like put it in order in terms of square meterage, the room numbers, all the rest, and just have a look at. And obviously the data's imperfect, so you really still need to climb into it and have a look around. And but it's interesting. I also, and this is like a cheat sheet thing, but again, you must cast your own eyes over it, and your solicitor has to look at it. You can do the same with the strata report, with the building report. I'll put it in and go, let me know what the numbers look like, or I'll ask that question. I mean, this is all very new. This is, new stuff that I'm playing around with. At the end of the day, nothing stops the human actually making those phone calls, because I'll ring a pest and building inspector and go, this is like 15 pages of disclaimer on those reports, and there's a few pages of good stuff, but then you ring and say, look, what should I be worried here? There's a bit of a concern. And most of the time verbally they'll go, oh, she's fine, she's been 50 years old, house, it'll be great, all that sort of stuff.
Well, they've got to cover themselves.
I know. And this is the thing, and it does spook people. Or someone goes, oh, it's, everything we're looking at's got asbestos. It's like, well, pretty much anything built prior to 1990, you're going to find there's a little bit of that in the build. When I excavated a build site that we've got, we have found a lot of asbestos buried in the yard, and that's very typical. So you might not have an asbestos in the house, but you go dig your pool and you find that 70 years ago someone had dug their garage into your backyard, all full of asbestos.
Dumped it in there,
yeah.
Of course. And you can't be too scared of it. Now, onto property women, because covered the investing, covered the buyer's agency, property women. Talk to me. What's property women?
Okay, in 2006, that was established because there was nothing else in the market that was talking to females about property investing. So it came about because there was just nowhere for women to go into those spaces where that arena was still very male dense.
Absolutely.
And you're in an environment where there is that energy level, and women wouldn't put their hand up and they wouldn't ask the questions, and they didn't want to seem like they were silly and asking dumb questions. Ironically, there aren't dumb questions. If you don't know, you don't know. And it started out and it just grew momentum. So it was all across Australia, and it was a lot of education there. And we've evolved it now since that time to, I've got a tool on that called the Buyer's Advantage, and that's where they get a mentoring, they get access to me. It's a lot more affordable than working with me as a full-term buyer's agent. It's there to support community, like-minded, and just educate, and again, with my database, I share with them off-market leads I get and things like that. If I've got and it happens all the time, I'll get a cracker property, but I've got no actual buyer.
You've got no one that wants it at this point. Yeah.
And I'll look at it and I'm like, no, I really want that. It's a really good property. I know it ticks all the boxes, cracking yield, and I've got no one. So we've got a really decent-sized database, and I'll share that out with them as well.
It's good community.
It's great. Like, it's the community size is great now. I think over the years, at one point I think the database was at 16,000.
Wow.
Yeah, and I've tied it up over time, and obviously it's a long time. It's been around for some time now. So I just love that, and I personally was an attendee at one of their events, and then I bought the company in 2015. So it was actually for me a really big catalyst in my own success. I went to one of their events. And that's where I learned about equity. Again, you don't know what you don't know until you're sitting there and you're like, I can actually buy something else. It was just the early stages of my own investing journey.
Yeah, I mean, you can't just pull yourselves up by your own bootstraps and expect to know this. I mean, there are obviously a lot of caveats. There's a lot of tax information here, finance information there. If you don't know, you simply don't know. Do you still see that there's barriers for entry into the property market for women at the moment?
Not overly. I do. So